Welcome everyone. Good afternoon and or good morning. Welcome to our webinar, How to Create Your Company's First Expense Policy, presented by Early Growth Financial Services and Abacus. This is going to be roughly a 60-minute webinar. That will include the presentation itself and then a short Q&A period to follow the webinar. For all of you listeners, you should have a questions panel in your GoToWebinar console. We encourage you guys to ask questions throughout the webinar. We will interject periodically into the webinar if possible to get your questions answered. Otherwise, we will ask as many as possible at the end of the webinar, and then of course follow up via email with any we could not hit during the presentation itself. So the presentation will be recorded. It will be sent to all registrants via email as a video recording. You usually will receive that within 48 hours of the conclusion of the webinar. And of course, we'll have the presentation up on our Early Growth Financial Services YouTube channel as with all of our archived webinars. So without further ado, we'll get started here first with our presenters. First up, Sirk, Consultant CFO with Early Growth Financial Services. Good morning to you on the West Coast, Sirk.
Good morning, Jason. Good morning, Omar. And good afternoon to everyone on the East Coast and in the Central.
Great. Thank you very much. You want to tell us a little bit about Early Growth Financial Services?
Yeah, absolutely. Thanks, Jason. Early Growth Financial Services, we are a national accounting and financial consulting firm that works with small and medium-sized companies, typically companies who are small enough yet where they don't need to be hiring full-time people and looking to kind of cut costs and do things as value-oriented as possible. Out here on the West Coast, is particularly in the Bay Area, that typically means high-tech startups, funded companies that are looking to grow. But across the country, we have offices in Los Angeles, Seattle, Chicago, New York also. And so we work with all kinds of different companies. And we provide, basically 4 types of services. We do tax returns, tax filings. We do 409A valuations or valuations of companies who give out stock options, for example, and who need to value their common stock on an annual basis. And then on the consulting side, we provide both accounting services, day-to-day bookkeeping and accounting services, as well as CFO services. And so typically we go in as a team of 2, an accountant and a CFO, and we will literally be our client's accounting department, and we'll take care of everything from even as small as daily transactions, but typically more of the monthly closes, making sure that the financials that are being presented are GAAP compliant, accrual-based financials that both our clients and the outsiders, particularly investors, want to see in a particular format, and that's typically what we provide.
Great. Thank you very much, Sirk. And also presenting, joining us from here on the East Coast in New York City today, Omar Qari, co-founder of Abacus. Omar, good afternoon and welcome aboard.
Thanks, Jason. Really appreciate it. Really excited to be here speaking with all of you. Just to give you a quick background on Abacus, Abacus is really building the first intelligent expense management system, and our goal is essentially to replace the need for expense reports in the first place. We manage everything from reimbursements, corporate card programs, all of your accounting sync and expense policy management needs, you name it. So that's a little bit about Abacus.
Great. Thanks a lot to both of you gentlemen. So we will jump right in. We'll start with a little intro. What we're going to be talking about today, tracking and managing employee expenses, right? Super critical. It affects cash flow, affects your taxes, allows you to mitigate cash burn, manage and make operational changes when you need to. And, it's tax season will be here again before you know it. So it's always great to be on top of that and be prepared rather than working from behind. So we're going to break it down into 4 different topics today that we're going to talk about. We're going to start with federal and state laws. and then we're going to jump over to expense policy and even provide some examples there. We're going to talk about managing expenses once you have the policy in place, and then finally we're going to get into reporting and what that's going to look like. So first up, we're going to talk federal and state tax laws, and our old friend the IRS makes an appearance here. So Sirk, why don't you lead us off?
Sure. Thanks a lot, Jason. Yeah, and there's obviously two parts to this, right? From an expense management perspective, I think that the meaty part of it is kind of going to be in the policies and making sure that it's the right policy for your company. But absolutely, the taxes is a consideration that you need to make sure that you are complying correctly, right? So this isn't something that's going to require a whole lot of thought, but basically, you just need to make sure that the expenses that are being incurred, the expenses that you are reimbursing to your employees, meet these requirements, right? And that is that it is an ordinary expense that is considered a part of the particular industry, and in most cases it's across industries. But if there are particular costs and expenses that are particular to your industry, then that's going to be allowable, and that it's a necessary expense. And then I'll add a third part of that too, and that is that it has to be substantiated, right? Which means that you have to have paperwork to back up the amount that's being spent. And as long as those conditions are met, then basically the expenses that are being reimbursed to the employee is going to be an expense that's deductible to you as a company, and it's going to be I guess a reimbursement to the employee that is not going to be taxable on their individual tax returns. And those are the kind of the main things that you want to make sure that you're being compliant with. Otherwise, if you don't do that, you're gonna get into trouble from a corporate perspective. You can get into trouble from a corporate perspective if the IRS comes calling, and potentially the individual employee may ultimately get into trouble as well. If it's deemed that they had reportable income that should have been taxed, when in fact it really was classified as an expense.
Yeah, that's a really helpful overview, Sirk. I think my main comment on this, the main thing that I tend to see among founders or whoever that person in the company or startup is in the early days that's responsible for approving employee expenses, the main thing I see them get tripped up around, as an example, is probably things like benefits and perks. And what I mean by that is things like, the typical startup benefits, things like the gym reimbursement and the Friday lunch, and things like that. And a lot of companies, they think like, oh, great, well, that's an employee expense and that's totally deductible. And while it may seem like these are company expenses, these are some examples of things that are actually not considered a business expense, and in most cases are therefore taxable. You can totally still run it through the same process, but what I would really recommend is just make sure to categorize it separately so that you can go in and kind of deduct the tax element from that, from payroll. So I'd say that's like one of the big things I see people get tripped up with. And then the other big thing is probably around contractor payments. Sometimes, there's many different ways to structure contractor contracts. And, in many cases, there's the actual payment for the service, which requires a 1099. But then there's also things which are, reimbursable business expenses that are just expenses they're incurring depending on the relationship in the way that they're working with your company. And so I would just say be very cognizant of each of those types of situations, because there are some cases where things are taxable.
Yeah, we could spend a lot of time going through kind of individual cases, but really the main takeaway here is that it is easy to get tripped up. There's lots of resources, obviously professionals, but even online where you can look for things. Just be aware that it is easy to get tripped up, and to keep that in mind when you're kind of setting up the initial processes and policies.
Great, and we've moved on here to the next slide, some general IRS housekeeping rules, nothing steadfast, but rules of thumb, and we've got several here to review. Sirk, do you see any of these 6 that you want to jump into immediately?
No, well, I think the list is a really, really good list. I think, for each company and each founder or each manager who is kind of coming up with these policies, just be aware or just kind of, take into account, your company culture and what you're trying to do, and make sure that it's being communicated properly. Things like mileage, most companies use a standard cents per mile that is mandated by the government as to what you can and should be reimbursing for. Makes it easier. Make sure that you are just keeping good records and make sure that you are not paying for things that are not going to be covered by the IRS, in their regulations for what is reimbursable expenses.
Yeah, that's actually I love the fact that you framed it in the context of company culture, because I think a lot of businesses, they think this is more of a, black and white type of situation, which is determined by, these like overarching rules. And to an extent it is, but I think a lot of it is also in the area of, what is the kind of company policy beyond that you want to have, and what is the type of environment you want to create for your employees. And so, for example, expense threshold, like this one really sticks out to me because this is a great opportunity where you can do yourself and your employees a favor by, for example, not requiring receipts below a certain amount. If you're looking to move quickly as an organization, and maybe they're using an employee expense system, and even those expenses that are coming in are being ingested from their card anyway. Those expenses happened. It's just a matter of like saving them some time where you can to increase productivity. And then the other side was the one that stuck out to me was providing context. I think super important, and this part is just a really good opportunity to have a system in place that can either fill in some of those details for you. For example, Abacus, we can kind of predict what the category is or the account, so that we can kind of fill that in for you. But for things like entertainment expenses, where maybe you want attendees, or hotel where you want check-in, check-out, try to be thoughtful about not overburdening, but still having enough information so you can run your analyses on that data and get people paid back.
It really is. That's a really good one, Omar, on the providing context, because I know that's one that usually gets a lot of pushback, right? It gets a lot of pushback. As a CFO, see it a lot, where people submit expense reports and they'll submit a receipt and they'll just say, dinner, right? And it's just, if it's a substantial amount, there needs to be good backup and good reasoning. We talk about kind of the 4 W's and the 1 H, right? Which is, who was there, where did the meal occur? When did the meal occur? Why was the meal necessary, or why should it be considered a business expense, and how much was it, right? And so to Omar's point, a lot of softwares now, including obviously Abacus, will provide a lot of that information, but you do still need to enter in things like who was there. And it's for all the record keeping that's going to be required in case there's an audit down the line, as well as just to make it easier for guys like me, the guys in the back office who are approving these expenses to be reimbursed as quickly as possible back to you or back to the employee. So that there isn't a whole lot of, oh my gosh, there was $300 spent, and was it for 5 people? Was it a client meeting, or was it just for 2 employees going out for a nice steak dinner and some drinks? And so all that stuff makes it easier across the board for the management team, for the accounting team, as well as for record keeping down the line.
Great. So that's, I think, a good segue into actually the expense policy itself. Obviously, eliminates a lot of the gray area and provides a guidance that we've begun talking about here. Omar, you want to talk us a little bit more about, the expense policy kind of in general?
Yeah, no, obviously, really interesting topic to me, especially seeing the evolution of how the expense policy has changed over time. I think the way to make this really easy for yourself, especially starting out, is to start with this clear, concise expense policy and iterate on that over time. So like put in place a few rules, don't make it overburdened. I like to recommend to our customers that they follow this Goldilocks principle when it comes to expense policies. You don't want it to be so strict that employees have a terrible experience. Don't submit for a really long time. Maybe they're generally less productive as a result. But at the same time, you don't want it to be so loose that you can't measure the kind of insights that are important to you, or be able to, have only expenses that you're comfortable as a business approving in the first place come through. And so I think, at Abacus, we're really trying to think about the expense policy entirely differently. It should no longer be this document that you just kind of share with your employees and expect them to follow. I think the ideal scenario is one where there's clear, concise rules that can be surfaced to the employee in the moment that they're trying to submit them. But also on the other side, for administrators, how can we make it where the policy is something that learns your approval patterns over time, and can help cut down that workload for you as an approver. So for example, if you always approve that $25 QuickBooks expense every month because it's recurring, then, is there a system that can learn that and auto approve it for you next time? Same thing with those coffees and other less relevant expenses. If all the details are there, can the system help carry more of that burden for you? And so I think there is an evolution happening in the expense policy space, but even for a basic expense policy, just like keeping it simple is probably the way to go.
I can't. I'm so grateful for things like this as a CFO, and other managers are as well. And I think that's a great tool to be adding, for even small companies, and certainly as companies grow and as this becomes a little bit more burdensome. The one thing that I'll kind of chime in again on, we talked a little bit about culture, and how an expense policy will be viewed, right, by the employees as part of the culture of the company. And so, to echo Omar's comment about the whole Goldilocks thing, about just keep it in mind, right? Keep it in mind about what you're trying to do, the behaviors that you want your employees to exhibit, and the expense policy should kind of be a result of that, right? The one thing that I've seen get companies into trouble a little bit is also just being kind of consistent and fair, right, across the board, right? So I've seen companies who say things like, well, you know what, we don't really have a policy, but kind of people kind of know what they're supposed to do, and then an executive gets away with getting a little bit more, and then that goes down the line. And so just if you're fair and consistent, and you actually have a concise set of rules in place that everyone in the organization is to follow, then I think that'll go a long way towards getting a lot of buy-in from the entire organization.
Yeah, I have one funny story, which is that I remember when I was first speaking with Patrick Collison at Stripe about their expense policy and how they want to implement that. Then if you think about it, an expense policy is just this organizational understanding of what is okay to expense, and his ideal scenario was one where every employee can see everyone else's expenses, and there's basically this like mutual understanding of what is okay to spend on and what is not. And I think overall what he was getting at, they didn't end up doing exactly that, but what he was getting at is, it does play into that organizational culture and the trust among teammates, and so yeah, I totally reiterate what Sirk was saying.
Great. This will switch us over to actually some examples of some expense policy rules. We've got actual good examples, but if you guys, either of you, Omar, Sirk, also have some doozies on the bad side that you might have seen in the past, we'd love to hear those as well.
Sure, I'd be happy to. I've certainly seen a lot of them, right? And again, it just kind of comes down to just making it explicit, concise, but at the same time, make sure that things are being spelled out, be specific about it's particularly as you come across things that people try to kind of slide in, right? I've seen things like I've seen people put they're traveling and they go to see a show, right? And they put the tickets of the show on an expense report. I've seen people try to put in, they say they're traveling for a couple of days out of the office or out of their home into a different city, and they had to put their dog, right, in boarding, for example, overnight boarding, and they try to expense that through. So those are the kinds of things I've seen people put in speeding tickets, right? Saying, oh yeah, well I was trying to get to a client meeting and I was speeding and I got caught, and so I think this should be a business expense. And so things like that are, you should keep in mind as to what people are going to try to put in, and try to be specific about what you can and cannot be putting onto an expense report.
Yeah, that's so interesting because I've totally heard of all of those types of examples. I think the thing that really resonates with me is that when you have a very super detailed policy that tries to literally cover every single possibility, then in the employee's mind, it seems like, oh, well, if this policy is so robust that it literally covers every single thing, then if I'm able to submit it, then, it's probably going to be totally fine because it's so detailed that, I shouldn't even have to think about whether it's okay or not. Whereas if you leave, if you have a very clear one, but you at the same time, you focus on the simple things that are most important, then I think what you'll find, assuming that you're hiring the type of people you want working in your company, you'll generally find that people are much more thoughtful about what they expense in the first place. And so yeah, and one example of that, if you put in place say a $60 per diem on meals, in one case, yes, that makes a lot of sense to do that. But the other side, the flip side of thinking about that is when employees see a budget, then they think, okay, well, I have to spend every single dollar in that budget. And so, keep in mind there's trade-offs to everything.
Yeah, I agree with that, Omar. Thanks for that. And obviously, I look at it all from a CFO perspective, where I do have challenges of people trying to kind of game the system, right, to a certain extent. But I agree with that last sentiment that you said. The best employees are going to be very, very aware. And especially if you've got the kind of culture that people should be worried about things like that or thinking about stuff like that. I do see some people who try to take advantage of the meals, but I see much more often where people are being very, very careful, right? And they're not going to exorbitant restaurants. They're not trying to take advantage of the system. And you're right. If there was a $50 for dinner limit, then their eyes would open and say, "Ooh, I could spend $50 downtown for dinner on a nightly basis, when if there's nothing written down that and just say, reasonable cost, then they might, be perfectly happy going to a Chili's and spending $20 or $25. So that's, yeah, I think that's a really, really good point. Probably, a compromise between being really, really explicit and having a big, long laundry list of items that can and can't be excluded, versus some high level ones with a comment that says obviously that all expenses are subject to review, is probably a good compromise.
Right. Thank you, gentlemen. So we've got the policy in place. Now we need to talk about managing expenses, what that would look like once you've got your policy in place. And Sirk, you in the back office, you know better than most about properly keeping records, right?
Yeah, and we'll just kind of start with with some numbers here that are just kind of explicit. We're supposed to keep all records for up to 3 years, for 3 years, and it's a best practice to keep it for 7 years. But I think kind of the overarching thing here is just doing a good job, right, from in the back office and as a management team of keeping records. And to this level, I think automation software, I think software as a service products like Abacus are great tools, right, to do this, right? There's no reason any longer that we need to be having expense reports in Excel being printed out and filled out, and then receipts being stapled onto it, right? That's the way we used to do it back in the old days, and I'm old enough to remember the old days. And nowadays there's lots of tools that you should be looking at to help you assist with keeping your records, but just really keep the records, hopefully online in the cloud someplace, so that you have access to it and you can substantiate going back in time if needed.
Now, we had a question come in, I think would actually be great based on what we're talking about here. A question from one of our attendees. Can credit card info count as a complete record for IRS purposes?
You mean if you're just talking about the like a statement, like a credit card statement that just says, hey, this was charged to this credit card on this certain date by this vendor, and you basically make a copy of that and you highlight that and you submit that as an expense reimbursement. If we're talking about high dollar amounts, no, it's not. There needs to be more substantiation, and it could be literally just a note on there that says this is what it was for, and that might suffice. But there isn't. I don't think there is a black and white answer to that. But typically, I try to ask for, and Omar might disagree with me here, but I try to ask for a little bit more substantiation, whether it's a drill down into the actual transaction on the credit card statement. A lot of credit card companies allow that, where you can actually drill down a little bit more, and there's a little bit more information, and that might be sufficient, or an actual receipt, whether it's printed or a copy from the restaurant or wherever it was that you actually incurred the expense.
Yeah, I totally agreed, Sirk, because I've seen this happen a lot. And I think, so if it's under $75, and it's not important to capture a lot of the details anyway, according to the IRS, and if you want to build that culture, which is very trusting in the organization, then maybe for under $75, that's fine. But for anything above that, if you think about it, the credit card statement, and I've seen employees, they highlight it, they snap a photo of their screen, and they're like, oh, here, this is my receipt. But all it really has is it has the merchant, and it has the amount and the date. But it doesn't really have the line items that you need. You need an itemized receipt in order for it to be treated by the IRS the way that you want it to be viewed. because that is what explains what was actually purchased. And without that, it's hard to tie a business description to that expense.
All right, fantastic insight. Thanks to both of you. We've already touched on this next couple of sections here, but checks and balances, talking a little bit about building out like the layers of approval that we've seen here. Sirk, is there like a general guideline for how you lay that out, or what have you seen in the past?
Yeah, I think this is going to be very, very specific to companies, right? For each company, if you're small, you may not have any checks and balances. You may literally just be the one person, the CEO, the founder, or what have you, and there's really no one else, to manage that, and you may be the only one doing it. You may have an accounting department that helps. You may have managers. That should be part of the approval process. So it depends on the organization, the size, as well as the culture you're trying to establish. And this is where I would just say, you kind of gotta start small. Your first one should be relatively simple, but then you kind of make some adjustments as time goes along. If you find yourself spending too much time reviewing and approving expense reports, then you bring in someone else. You make it a little bit easier. Once you start putting in managers, maybe it makes sense for managers to approve expense reports up to a certain amount. And then beyond that, it might have to go to either finance or to a higher level executive. Again, you just got to do that Goldilocks, between too much effort and too much administration and bureaucracy versus making sure that things are being checked and things are appropriate for your company.
Yeah, and especially for smaller startups, like there is no benefit that you are gaining by adding kind of arbitrary levels of approval for different, above a different dollar amount, or having too many people involved in that approval process. Because remember, like form over substance as well, you want to make sure that like this is not a measure by which managers are hoping to measure themselves. Most of them are not necessarily as diligent as you may hope in their checks anyway. And so try to be very cognizant of what kind of burden you're adding to managers by adding them into that review process as well. And try to be really balanced about that, and remember like what you're actually trying to accomplish, which is you just want everything properly classified, and you want to make sure it's within budget. Try to think about whether there's a way that the software can do most of that work rather than having a human manager manually checking over things.
Yeah, absolutely, and I agree wholeheartedly. I always tell, especially for the kinds of companies that we work with at Early Growth, which is again kind of the early stage companies, or with a lot of high tech companies here, and I say to CEOs and founders, look, you have two responsibilities, two things that are adding value to your company: product development and customer acquisitions. Right? Those are the only two things. Everything else is a nice to have and not a must have. And so any time that you're spending on other activities is time not being well spent. And so look for tools, look for partners, look for software products that will help you get some of these things done with the least amount of effort and bandwidth on your part, because it's not adding value to the company. We don't want people taking advantage. We want things to be seamless. If you can find a software like Abacus who can help you automate the process of approving, getting these expense reports approved without you spending a lot of time on it, the small incremental cost of that is nothing compared to the amount of time that you would be spending, and what that time could be, how much value you could be bringing to your company by spending it elsewhere.
Mm-hmm.
Great, and of course with checks and balances, layers of approval, you've always got the policy enforcement, time to police the policy. Sirk, I'm sure you could speak for an hour alone just on this particular slide. You know, when you've got your first policy in place, what are the things to think of when it comes time to actually make sure people are following the policy you got in place?
Yeah, I think that's it. I mean, I think hopefully, as Omar said, this isn't a huge issue, and quite frankly, I don't see it a lot, right? I don't see it a lot where people are trying to take advantage, and we're having to enforce it, and we're having to call people into the principal's office, and slap their wrist because they're violating policy. We just don't see it that much, but I will say, try to. If you write the policy correctly, so that there is enough information in there, so that people can obviously see that what is appropriate and what is not, then hopefully the policy becomes the bad cop, right? That you're not looking at you're not asking a manager, or you're not the CEO is not having to go to an employee and say, look, what, I can't approve this expense report, and we're going to have to deduct it from your expense reimbursement because it didn't, because this is not an appropriate expense to be claiming. I think that's kind of the big thing, right? And as long as the expectation is set with the employee as to what is okay to expense, and how do you report it, and what kind of backup or substantiation do we need you to provide. And if they're doing that, then it shouldn't be an issue.
Mm-hmm.
And again, things like software, like Abacus will absolutely help you do that. And I obviously mention Abacus because because we're presenting with Abacus, but there's other softwares out there as well, just like with anything. And I think you owe it to yourself to look and to make sure that you're finding a good fit. But I think that there's a lot of tools out there that's making this part of the process much easier now for CEOs and for the managers.
Yeah, certainly. And I would even say in the earliest days, when it's just like a few people, what you really want is you just want an easy way to kind of collect all of this information and start to be thinking about this type of stuff. But yes, as Sirk said, like, review different options, but there's try to, where possible, just keep it really, really straightforward initially, because you can go down a whole rabbit hole of complexity that, as Sirk also said, is just not going to add value to your business. You want to make sure you're going to be around in a year, not that the expense policy was followed.
Right. And there's and I think if you just look online, right? I mean, there's lots of different templates out there, and you'll get a feel, right? I mean, if you do a search online, you'll probably see I don't know how many hundreds of different templates, policy templates that you could choose from to start with, and you'll kind of hone in on what feels right for you and your organization at this point in time, right? And then have the flexibility to make changes as you go along. But this isn't. I don't think this is rocket science. Just kind of keep in mind some of these other things. But this isn't. This isn't something where you have to think about every single item. I think it'll be pretty clear to most people in most organizations what is an appropriate level.
Yeah, so let's talk about the reporting aspect. Omar, this is your wheelhouse, of course, so I'll kind of turn it over to you on how you can take the insights from, so it's not just essentially a spreadsheet, right, where you're tracking everything. You can use it to generate some additional insights into your business, right?
Yeah, I think the expectations, well, firstly, this is more like as you're starting to grow, as you're starting to recognize that there's different types of insights that you're going to need. I think the capabilities as well as the expectations have risen, whether it is the customer acquisition costs that you want to start tracking, or the ROI on specific marketing spend on events. If you think about it, when your employees are increasingly taking taking on the bulk of spending in the company, then, imagine like you're going to have so much of the cost buried in those employee expenses that you need a way to really flexibly be able to figure out, okay, across my sales team, for each of our different clients, how much are we spending to acquire each of these, whether it's travel to go visit them, whether it's different meals or entertainment related to that. For consulting firms, which ones of those are billable back to the client, which ones are not. For marketing teams that are going out on events, then incurring the spend of airfare and meals and the actual supplies to set up the booths, and all of that factors back into the ROI in determining, should I be going after this customer? Should we be attending this event? And those types of strategic business decisions are very much informed by this data. And so while each business is different, I think having the flexibility to really organize your data into meaningful reports is something that you should kind of think about as you start to scale the business.
Yeah, obviously as a CEO, having access and ability to prepare and run and analyze this type of data is huge, right? And this is probably the biggest value add. I'm going to be honest with you and tell most of the listeners here that I don't do enough of this, right? And the reason for that is probably due to the fact that I'm working with typically early stage companies, and there isn't a whole lot of ROI to begin with on most things. But I certainly as a company grows, having access to this data even from early on is going to be really, really helpful. If you really think about it, there aren't that many costs that are really manageable, right, by a company, right? Obviously salaries and how many people you hire, but ultimately, this is the kind of thing that is considered discretionary. This is a discretionary type of expense. Determining the value that we're getting for the spend is critical. It's going to be critical to how successful a company is, and not only like, do we spend it, but where do we spend it, right? For the next dollar that we want to spend, we want to get the most bang for the buck, and having access to the data and being able to run the reports is obviously a necessity in order to get those kinds of information.
Great, thanks, fellas. So we've hit the question and answer period here. I mean, we've hit a lot of great stuff here. You both have provided some amazing insight, on a topic that a lot of early stage founders don't really ever think about until it's too late, right? So a reminder quickly to our attendees, we've got several questions that are already in, but if you have a question you'd like to ask, please use the questions pane in your GoToWebinar console. We'll try to get through as many of these as we can. We got a couple of questions kind of around this topic, so we'll start with this one and maybe have more of a general discussion on it. But a couple of folks have asked about company credit cards, and when is early stage too early, or how far along, how many employees should I have before I look at getting corporate cards? Sirk, I'll start on your side. What do you think about that for early stage companies?
Well, most of our clients have corporate cards, right? It's a question of who has access to the corporate cards. More and more companies are using credit cards to purchase, things like, regular software and buying things on Amazon and things like that. So most companies have them. At some point, obviously, and it's usually the CEO or the founder who is using it. Maybe an exec admin or the office manager has access to it so that he or she can be ordering things online. So most companies have them. When it makes sense to allow others to have their own cards as part of it, as just another card on the account, is going to obviously depend on the company, the type of spending. I personally don't like to have. I like to to wait as long as possible before giving corporate cards to other members of the executive or sales team. And I prefer that, you know, they go through expense reports because, again, there's probably more, I guess there's better reporting, right? If you use a corporate credit card, it's very, very easy for, you know, someone to charge something and then not provide backup because they're not having to substantiate it and get reimbursement. So it's easy to get lax about record keeping for corporate credit cards. I don't see a lot of issues where, you know, people are worried about, you know, giving credit cards to employees because they're worried about them overspending or, you know, buying things that aren't appropriate. Again, if you're hiring the right type of people, that shouldn't be an issue. But it's more about the record keeping part of it that, you know, that makes me a little bit wary about giving credit cards to other non-CEOs and non-office managers.
Yeah, I have really strong feelings on company credit cards. You know, if you, first of all, for the earliest stage, if you think about it, the only way you're getting a company credit card in the first place is if it's essentially tied to one of the founder's credit scores, right? And so right there, like, it's not actually a company liability credit card in the sense that the company has value that the corporate card issuing financial institution is relying on the company. No, like, it's tied to your personal credit. And so if you are going to get company credit cards, and then, you know, the founders are going to have some, which we did. We had, you know, each of the 3 founders had company credit cards. Then I would just, you know, be aware of that. And then secondly, if you're going to share those cards around because you feel like, oh, it's more secure if we just have 3 cards, but then, you know, our director of marketing, I'm going to share the number with her, director of sales, I'm going to share it with him, and then, you know, one of the admins need to spend on something, so I'm going to share the number with them. Then essentially it's like you've just given away the ability to control that anyway, but then on top of that, you know, you now have just lost visibility in terms of who's actually spending. And so if you really are going to have them spending on those cards in the first place, I would say get each person a card. But I would really question for yourself, what is the actual purpose? Like, why do you need to have the spend go on a company credit card? And in most cases, it's probably because the employee can't afford to float the company for 30 days before they get reimbursed for something. And so what we've found is, you know, again, using some type of software that can help with the actual payment experience. If you can get the employee paid back the next day, then they're more than happy to spend on their personal cards, and, you know, they'll not have to float the company. Maybe they'll even get to keep some points out of it. And then you don't have any of your personal liability floating around out there. And so I think that, personally, I think, as Sirk was saying, like, go the reimbursable route, because not only do you get all those benefits, but, you know, that way the employee is motivated to submit the expenses in the first place. There's very low motivation to submit if, you know, they're not even waiting for a reimbursement anyway. It's on a company credit card.
I've seen it too many times where I'm fighting, and I use the word fighting, but I'm kind of, you know, trying to coax, you know, the CEO, for example, the founder who has the one credit card. I'm trying to get them to kind of, you know, hey, listen, you know, we've got this credit card. We need the receipts, right? And so. It's hard enough, you know, with one person. With multiple people, it's near impossible, especially if you're just sharing one card and number and giving people access to it to be able to charge over the phone or the internet. Then that makes it doubly difficult to figure out who spent it and where do I go to get that receipt.
Yeah, if you are really going to go the company credit card route, I would really encourage, just, you know, when you're evaluating software, make sure that the software can automatically match receipts to the corporate card expenses, that it can kind of auto-categorize it for you. Like, you want to get it to the place where the system can do most of that heavy lifting for you, because if that is the case, then it'll be much more likely that employees or the CEO in this case are going to submit those expenses when all they need to do is just type in why they were there or who they were there with.
Mm-hmm. Great point.
Great insight. Thank you very much on that. A couple other questions that have come in here. One that's specifically around travel expenses, and I'll try to truncate it a little bit. And Omar, I'll start with you. But do you typically see with companies that are putting their first expense policies in place for travel policies, do you see people leaning more towards a per diem type policy or just a normal reimbursement type of policy? Is there any reason to go one way or the other, or do you see companies leaning one way or the other as far as how they put that into place?
Yeah, so it's funny. Like, I think when most founders or whoever's responsible for putting it in place are thinking about it initially, they tend to kind of lean on what they're familiar with or maybe what they experienced at a previous company. I don't think there's necessarily a right answer, but I would keep in mind the trade-offs of each. So, for example, if you put in place a per diem, then you better get comfortable with the fact that that per diem is always going to be met. And so, when you put in place a per diem, you're really you're creating a behavior in the employee where they recognize, like, this is what the company recommends I spend. As much as you'd like to believe that's like the high kind of limit of the budget, it's kind of not viewed that way. And I think that's okay, because if you kind of decide, like, hey, if we just have a per diem and that's going to be easier to think about both from our perspective and from theirs, then great. But the other way you can think about it is breaking it down, break it into meals, into transport, or like whatever it happens to be. And some of the benefits you get there are you get a little bit more detail in terms of the classification, so you can understand how much are we spending on meals versus transport. But if for your business that's not relevant, and if you believe that it's always going to be around the same amount anyway, then maybe a per diem is just kind of easier to do. And I think with paper expense reports and with spreadsheets, it's almost always the case that it's easier with per diems. If you do have a system in place that's doing a lot of the work for you in terms of classification and ingesting your card data, then maybe you don't want to go per diem, because you can get the benefit of all the data and insights without having to do all the additional work related to that.
Yeah, I will agree mostly with the last thing that Omar said, which is that we typically see more of actual expenses than per diems for many of the same reasons that Omar stated. I don't think you want to be putting in a culture where you say, hey, look, you can spend this many dollars per day. Most of our clients don't want people to be thinking that way. And now with some of the tools that are available that make it easier to populate a lot of the reporting, it's kind of taking away one of the main reasons why people use per diems in the first place, which was ease of administration and ease of reporting. So I think most of our clients use actual expenses rather than per diems.
Awesome. An interesting question here around policy violations. Should HR be consulted when you're building out the policy violations part of your expense policy? I mean, should there be some official talk or word or thumbs up from the HR team as far as repeated policy violations, or more likely a particularly egregious type of violation? I mean, do you guys see anything like that, or does it ever really get that far?
I don't see it get that far. I don't know about Omar.
Yeah, I mean, it's like, I guess on the one hand, if you think about really early stage companies, then the HR is probably just the founders in the first place, and they're probably discussing what the expense policy should be together. If it is a larger organization that has an HR team, I would actually say that it would be good to run that part by them, only because if you think about the expense policy as part of your company's culture that you're trying to build in the organization, then making sure that's tied into the values that you're purporting to have during the hiring process, during onboarding, when the employees are actually there in the company, then making sure that the expense policy is reflecting the same types of values that you're putting out there in terms of both what the policy is and then also the punishment, in the event that it's not followed. I think it would be like a very positive sign if a company did something like that.
Yeah, you're right. You're right, Omar. If the organization is big enough to have an actual HR department or director of HR, even if it's just one person who is managing these, basically everything related to hiring and terminations and salaries and things like that, obviously getting him or her or them involved in the process. I mean, they're going to demand it anyway, right? I mean, if for every HR department or director that I've ever worked with, they're very, very keen on making sure that they are involved in the process, anything that to do with employees, right? Whether it is hiring or terminations or penalties or what have you. So yeah, it's probably if you got an HR department, you're probably going to get them involved, at least on the review level. If not even just the part of the process of setting the policies.
Great. I think we've got time for one more question, one that's almost kind of a review of maybe some of the stuff we've already talked about. But one of the attendees have asked, is there one thing that startups typically or always forget when they're putting together their expense policy? Do either of you, Sirk, we'll start with you. Is there anything you see where the typical startup just you're like, oh man, this is you guys forgot this one little piece. Don't forget about this. Anything along those lines?
Yeah, well, the biggest one by far is not putting one in place. If you're actually going through the effort, if you've got the kind of the mindset of, hey, we're going to be putting together an expense policy, I can't really think of like any particular specific item that is missed during putting together a policy. It's really that decision to go ahead and put a policy in place. Most of early stage companies that I know, that's the issue, right? Is that they actually don't put one in place, and they just kind of go willy-nilly until they run into problems, and then only then will they say, okay, you know what? I think we need to put a policy in place. If you do it early on, and if you kind of get some of the templates and look at some of the softwares that are available and look at some of the recommendations that are being made, then I think you're going to capture pretty much everything. And if you miss something, in an initial stage, then again, you should be flexible enough to be able to add it as you need over time.
Yeah, I think the things that get missed the most are, well, if you think about it, the employee tends to, or has historically looked at the expense policy as like a negative thing, like a burden or something that is going to hold them back from doing something. So I always encourage companies to, build those positive reinforcing things into there. So for example, have a policy, at Abacus, for example, we have a policy where employees once a day can go and have a one-on-one coffee with each other to, just speak about, anything. And, it encourages the team to get to know one another better. We put in place a cap on, how much a coffee can be or like what that means. And I think building in some of those positive perks into there, like, Friday lunch up to $15 as long as you go as a group. That kind of stuff, I think it helps to foster more of that culture and team development that you want, and it makes the policy overall, come across as something which is more, focused on building organizational culture rather than like, oh, this is the stick that I'm going to get if I go out of bounds.
Yeah, that's great insight. Thank you both. Gentlemen, I think we've reached the end here today. Sirk, Omar, thank you again for all the insight and for joining us today. For everyone that attended, reminder that you will be getting a recording of this via email within 48 hours, and we will have this up on our YouTube channel as well. Sirk, Omar, thank you again.
Thank you.
Thanks, guys.
Thanks everyone for attending. We appreciate it.
Great.
Great
Thanks to
speaking
all
to
of
you
you
guys.
for joining, and have a great rest of the week.